Kalyan, can I start?
Yeah, please.
Namaste, good morning everybody. This is me, your host Vyoma Parihar, and I welcome all of you to the world's largest fintech fest, Global Fintech Fest. Everyone, this event is organized by National Payments Corporation of India, Payments Council of India, and Fintech Convergence Council. Everyone, this edition is supported by Department of Economic Affairs, RBI, and IFSCA. So today, we'll be starting our session with a very known speaker who is with us here, Mr. Vikram Pandya, will be joining virtually. He is the head of research, Varanium Capital, and our topic of the discussion is overview of emerging global fintech business models, which is a part of our workshop. Before I go ahead, I'd like to tell you all that his presentation is going to be in various different segments. So whatever questions you have, you can put it in their chat box. We'll be taking your questions after each and every segment. So please attend this very carefully, and whatever questions you have, please put it in the chat box. All right. So it's time for me to invite, he's already with us, Mr. Vikram Pandya, Head of Research, Varanium Capital. Sir, over to you.
Thank you. Let's begin. Today's agenda will be to cover entire gamut of fintech solutions which are there in the market today. It will be more India focused, but with the global landscape in mind so that we can understand how everything gels well together. I hope my screen is visible now.
Yes.
So let's begin. We will start with the overview of the fintech itself so that those who are attending fintech related sessions for the first time will have some basic understanding, and then we will begin with stake by stake and segment by segment, which are the business models which are growing rapidly, what are the nuances within them, what works, what is not working out, and why. And that is what we are planning to cover in today's session. In next 2.5 hours, the idea will be to make sure you know all the different innovations in the fintech space and make sure that you are aware about the opportunities that they present. So very quickly, we will start with basic definition of fintech. I'm sure you guys know about it, but we will focus on the bold words carefully so that whenever we cover those models, you can relate to these keywords and identify and understand how they are used in experience, in delivery, in design. So let's start with the definition quickly, right? Fintech is use of emerging technology in design and delivery of financial product and services. Now, when we say design and delivery, it includes both channel as well as from the product side. And when you are planning about the product, you need to think about the segment, customer segmentation that you are going to deliver it to. So when we think about customer segmentation, then product, within that features that you are going to provide, and finally the delivery channels through which you are going to reach out to the customers. That is all which you need to remember as a part of the definition. And it is not everything. It is around financial product and services. So let's assume when you are telling your smart car that, okay, Google, book restaurant for me. That entire transaction, when you do, only one part of the transaction where you are making the payment to book the restaurant or book the movie ticket, only that payment part is the fintech part, not the entire thing. It is just the technology. But whenever we are talking about financial product and services here, which is the payment, and then only you can consider that as a fintech part. And we call that as embedded fintech. And that is what brings us to the next slide, which is what is the embedded finance? So you use APIs. APIs are nothing but connectors, data pipelines, which allows you to communicate in the standardized manner across multiple different diverse systems. So embedded finance use APIs to distribute fintech product and services using the best possible part of the third party app, right? So let's assume that you are booking flight ticket on Make My Trip, And as a part of that journey, you are buying insurance. As a part of that journey, you are getting EMI. And these are the fintech products. Insurance is a fintech product, as well as when we talk about EMI lending, that is a fintech product. And that is the fintech product part of the other journey, ticket booking journey. And that becomes embedded finance. So whenever we are combining fintech products as a part of third party user journey, that becomes embedded finance. These two are very critical concepts because whenever we look at any model, it will be revolving around these two set of definitions. And one thing is very critical, that you want to provide frictionless experience because you don't want customer to move from one place to another. You need to make yourself available where the customer is and whatever customer is doing. And that is what the embedded finance is all about. And we will see live examples later of all the different models so that you can appreciate the way people have implemented them. Finally, the fabric of fintech itself, how the fabric of fintech is created, how it is interwoven by fintech subdomains and enabling technologies. Very quickly, it includes payment related technologies, credit tech, insure tech, wealth tech, reg tech, and subtech. Now, you may have heard about top four, but reg tech and subtech typically are part and parcel of the other four. Anything that you use, any technology or tools that you use to comply with the regulation. Now, the keyword is comply with the regulation. That becomes reg tech. But when regulator is trying to check the compliance and the technology that they use to check the compliance becomes subtech, which is supervisory technology. Subtech is supervisory technology, while regtech is regulatory technology. And if you combine them together, it brings you the complete two sides of the coin. One is where enterprises comply with the regulations, and second, where regulator checks for the compliance using the technology. To give you a couple of examples, let's assume GDPR. GDPR compliance is done by certain applications, and that compliance that you do using those tools, techniques, and applications becomes part of the RegTech. On the other hand, because you have so many enterprises complying with this, it becomes virtually impossible for the regulator to verify. And that's when regulator may use tools and techniques to check that compliance, and that becomes supervisory technology. On the enabling technology, the building blocks which are there are APIs. We discussed about that. Blockchain. Blockchain allows you to create, I will repeat one more time, it will allow you to create trust in untrusted ecosystem. Now, for any financial transaction, you know that trust is required. Without trust, financial transaction cannot go through. Today, you have intermediaries which help you with that trust, which brings the trust in that ecosystem, like bank, regulator, you have intermediaries like brokers, and they bring that trust today. But what if you want to create an ecosystem where you don't have any trusted intermediaries? And that is where the blockchain can really help you. It is a computational trust that you are bringing, algorithmic trust that you are trying to bring. And because of that, it allows you to decentralize certain things, and you can have a distributed computing environment as well. So that creates a win-win situation for the new age of finance. AIML is emulating human intelligence, trying to identify pattern using machine learning algorithms, and those inferences, when you combine them together, then it becomes artificial intelligence. It can make some decisions like what we can do. Big data is a problem statement. Today we generate huge volume of data, and that data that we accumulate is of no use unless and until we can process that data, we can analyze that data, and to do that analysis, you require solutions which can handle that amount of data. And big data is a problem statement, and big data solutions like Hadoop, they are the framework which help you with the pattern recognition, processing of the data, and you can use ML on top of that. IoT is Internet of Things. It is nothing but set of sensors. Even your mobile has many sensors today. They are set of sensors which convert physical attribute like temperature, your heartbeat, etc., into digital parameters. So converting parameters from digital to physical to digital is what they are supposed to do. And not only that, they can communicate with the server with each other through internet, and that's why we call them Internet of Things. By communicating, it can report exceptions, it can understand what is happening and give you patterns which you can analyze, and based on that, you can make certain actionable decision. AR, VR, and MR. This is nothing but augmented reality, virtual reality, and mixed reality. Today, you have concept of metaverse, which is part of blockchain plus VR in a way. And this last segment in fintech has lowest influence as of now, but with metaverse and fintech in metaverse, as we will see later, it is starting to create a new ecosystem for fintech products and services. The way customer can experience is changing, the way customer can consume that product is changing, and when we look at fintech in metaverse, that is definitely creating new opportunities. We have seen recently itself that there are new products which are launched in metaverse from the finance. There are patents which we have seen both from Indian companies as well as global giants. They are working on how to create that experience layer around financial products in metaverse. So that is exciting opportunity for people to look at. With this fabric of fintech, what we are going to now focus on is what is the role of fintech in this entire ecosystem, because in India, at least, when you know, fintechs will need to closely work with both financial institutes and regulator. Because ultimately, while the regulator will regulate the entities, regulators are giving clear guidance around what they can do, what fintechs can do, what they can't. Because through regulated entity, indirectly, today, as you know, things are getting more difficult for fintech. So we will look at how fintech works in this environment. So fintech can either collaborate or it can do co-creation or it can compete with the financial entities. Now in India at least, they can do collaboration or co-creation, but they cannot compete beyond a point because today everything is handled by RBI and regulated entity, and financial intermediaries like fintechs which are delivering or distributing the product. The innovation that they can bring is around the customer experience layer. Globally, you have seen certain licenses. In India also, the path has been very clear for people who are planning to create fintech products which require greater regulatory oversight. They are asked to get either NBFC license or payment bank license or small bank license. So when you look at the entire scenario in India, it is around collaboration or get your own license and then you can create, co-create and compete. There are four quadrant in this partnership driven model. One can either aggregate. Aggregate means that you can aggregate financial product and services. You can allow discovery of those products because today there are so many products. You know, Bank Bazaar, Policy Bazaar, Paisa Bazaar, all these different players who are there. They allow you to compare the product, discover the product, and allowing you to do that ensures that those products which are not easy to find or compare, there is no information asymmetry when it comes to the user, and user can decide which one is the best one. So aggregation is one part. Then when you look at support, support includes everything around onboarding, validation, and appraisal. It includes your KYC ML, it includes your fraud detection, it includes your underwriting support, it includes everything around the back office operation. And when we say these are the supporting fintechs, they have grown rapidly over the last few years, given that every new fintech, when they start, they will require this sort of solutions. So whether it is, let's say, Science or whether it is Trulio globally, they are supporting onboarding of these customers in a seamless way. There are companies like Bureau ID which are giving 360-degree solutions as well. There are companies like Finbit by Yodlee, which supports multiple different data points. And all these different companies become part of the support ecosystem. Even account aggregator, as we will see, that becomes part of the support ecosystem. And they allow you to consume some data. It opens up the data economy in India. And then by looking at all these data points, people can decide. So this entire support ecosystem is growing very rapidly. It is one of the major ecosystem in fintech, and we'll see how it behaves within certain sub-segment like payment, lending, etc. Then we have design, innovate, which means that either you are designing yourself in association with the bank, or as a bank, you can design yourself a new product. There is a differentiation in the product variant. So when you bring a new feature within the existing product, it becomes a new variant. And if you change fundamentally how the product used to work, then it becomes new product. There is a fine, thin red line, but when you understand this clearly, it becomes very obvious that if you are just changing the nature of product by introducing one more feature, but not fundamentally, then it is a new feature or a new variant of a product. To give you an example, many banks provide savings account with certain features designed for women, designed for senior citizen, designed for army personnel, and those are the variants. Fundamentally, you are not changing the saving account as a product. On the other hand, buy now, pay later, when it came, buy now, pay later by default was the convenience product. It allowed you to aggregate your payment like the credit card, but you never had to enter multiple times that credit card number and details and OTP. So it was the fundamental difference between how the credit card functions and how the BNPL works. So underwriting wise, even the risk management, looking at how the disbursement will happen, collection will happen, that entire cycle is different. So that becomes a new product. New feature is just a variant, and new product is fundamentally different with certain features from the existing product. So hope that is now clear. And finally, you have deliver and distribute. Within this, you have lead generation, you have unbundling and decoupling. Now, delivery and distribution, people may think aggregation also does that, but aggregation does that for multiple different companies. This delivery and distribution can happen for one specific bank or financial institution, and it can allow fintech partnership to bloom very rapidly. There can be a dedicated partner. So, for example, Slice, Unicard, etc., when they were functioning with the banking partner, they were working with a couple of partners. They were distributing, designing and distributing the product, which was a variation of the credit card. Now, with the PPI guidelines, they had to change their model. But similarly, when you look at Jupiter Money, Five Money, they are working with Federal Bank. So indirectly, they are distributing savings account of Federal Bank. And that design delivery that they have done and experience there that they have built allows Gen Z or millennial people to appreciate that experience around the same savings account product. So delivery and distribution is related to lead generation. And what is unbundling and decoupling? So unbundling means that you have certain features combined together. You can unbundle them and you can repackage based on the customer requirement. So when we think about insurance, health insurance as a product, and within health insurance, you already know that COVID was covered. But what if I specifically create COVID cover? That becomes unbundling. And decoupling simply means that it is outsourcing, where while you are supposed to do the compliance and you are supposed to do those things, you are outsourcing that to some third party, and you believe that they are more apt in doing that thing or specialized in doing that thing, and because of that, you outsource that. Ultimately, when you consider and summarize this entire thing, any fintech which can optimize four currencies, right? And these are the four currencies: time, customer's time; cost, which is the actual pricing and the margin that you can bring; effort, customer will need to, of course, go for certain steps when they are consuming the product. So not only the time, but also the effort, and then finally the risk. These are the four currencies. If you are able to optimize one or more of them appropriately, then you will be successful. Before we jump into each and every sub segment, this section is over. So in case you have any questions in this segment, I will give you 30 seconds to ask those questions, and we will continue with the next section.
I hope everybody you have taken down all the important points from this particular segment. And if you have any questions, please put in the chat box. So we'll be very happy to take all your questions. Let's see if we've got any questions here. Um, I think so. We don't have any questions as
Sure,
now. As
we will
of now, we
continue.
can continue the presentation. Yes.
Sure, definitely.
Yeah.
So now we start with the main infrastructure, enabling infrastructure, which is provided by government. At least in India, we are starting with that. And globally also, we will see what are these different infra-based applications which are available. Interestingly enough, in India, we have public digital good that we have created, and those services which are available now through India's tech.global website. Government of India has made them available even to the global audiences. But in general, we will see the complete digital infra and what are these building blocks which enables Indian fintech ecosystem to thrive and survive. If you think about it, a few years back, when a new fintech is starting, they had to build all the basic building blocks or they had to rely on someone. And there was a huge cost involved in creating that infra or consuming that infra. With government's initiative, that infra is no longer difficult to obtain. It is much more cheaper and easy for people to integrate with. First and foremost, we have account aggregator. Now, in a nutshell, I will summarize what is account aggregator and how it functions, and what is the role of account aggregator in the data economy. So, when we think about India's data economy is evolving, and within next few years, you will see India becoming very critical in the data economy layer. And when we are looking at the growth in that segment, it is one of the fastest growing segment within the infra part. Fintech infra and data economy goes hand in hand. So account aggregator allows users like you and me to share financial data from FIP. Well, who are this FIP? They are financial information provider and regulated entities under different regulators, right? So you have banks, NBFCs under RBI, you have mutual fund, etc. under SEBI, for example. You have insurance companies under IRDA, and so on and so forth. So you have regulated entities which can share the data. Those who become FIP among the regulated entity, I will repeat, regulated entities which become FIP, they only can become FIU, but other entities like those which are not regulated entities, they can become FIU by registering with the Samati. Samati is the account aggregator, collective of account aggregator, and they see this entire ecosystem and create certain solutions around it by working with the ecosystem. So account aggregator, just to give you a simple example, you know how UPI works. You put virtual payment address, something at the rate OKAxis or OKICICI, for example, that is your handle. You enter that handle, you make a payment. So UPI is transfer of value, while account aggregator is transfer of data and information. You also have in account aggregator similar virtual ID or handle. That handle you need to give it to application which is requesting the data from you. To give you one simple example, let's say you are applying for home loan from HDFC and your account is with Kotak Mahindra Bank. Now, when you are applying for home loan, HDFC Bank will ask for the statement, last 6 months statement, and instead of going to the branch and giving it to HDFC Bank, now HDFC Bank can directly ask for your virtual address. That address, once you provide, it will ask for you to provide consent through account aggregator like FinView, OneMoney, etc. They will ask you to provide consent, and based on the consent that you provide, they will allow you to share the data from Kotak Mahindra Bank to directly HDFC Bank without leaving the application that you are using. So on the loan application itself, you can do this step. Data can be consumed directly. And the main advantage here is that data is coming from the source, which means it is tamper proof. Nobody can change the data. Let's say you have downloaded PDF. Now, if you modify the PDF with editor, it will be difficult to identify. But here it is not possible because the data is directly coming from the source. Now, similar to this, when we look at another advantage of account aggregator model, another advantage is that once you are requesting monitoring access, which was not possible earlier, monitoring access will allow you to build robust early warning system. It is in a way allowing you to share your data on a constant basis during the tenure of your loan, and that helps lenders build overall better early warning system. So that is the account aggregator for you. It allows you to share the data. It allows underwriting of the data at a much lower cost. Underwriting of customer becomes much more easier and better when you really compare with the earlier version. And financial inclusion can be much faster. Just to give you a comparison, earlier it used to cost around 100 rupee to 150 rupee to capture all this data, to get all the information in the right manner, do due diligence verification. Now with penny drop, now with account aggregator, the entire process is costing less than 10 rupee. And this pricing that you see is expected to go down further as more players enter the ecosystem. Then we have Open Credit Enablement Network, OCEN. Now, OCEN in India is allowing lenders to work with loan service provider, LSP. The LSP defined here is different from the digital lending guidelines. So I will just give you a simple example. You are Zomato or you are Tele. Now you have multiple users who are using your product. You have delivery boys who are delivering it. So on behalf of your customer, you will act as a broker and you will share that data with the lender, multiple lenders, to get the best possible quote for your customer or for your employees. By doing so, you are aggregating the supply and then you are making sure that the demand works, right? I think there is one question that we have. Let's quickly look at. Does unbundling also allow for creation of special risk pool, for example, diabetes? Yes, you can definitely do that. because ultimately insurance business, when you consider, right, it is about risk pooling. And when you are unbundling it, you can identify risk much better. You can know exactly what kind of experience you want to provide to that segment. So basically, you can create a segment within that sector easily by unbundling the product and repackaging it. We have already seen that, again, we'll see as a part of this discussion, that there are alternative insurance models which are coming up in the market where they package it differently, right? And absolutely correct. That is the right observation. So let's continue with Oken, which we were discussing. And under Oken, Cradle is the collective here, and it is the enabling ecosystem for Oken. So what will happen in future? Oken builds upon account aggregator model, which we have just discussed, and it builds upon public credit registry, which will come soon. Public credit registry will not only have information from the credit bureau as such, but it will have all the other information around, let's say, utility bill payment, the invoice payment that you have done. All those data points also will be collected. So that becomes public repository of alternative data. And based on the public credit registry or PCR, as well as account aggregator, OCAN can function very well, and it allows for cash flow based lending. So let's say there is a vendor, fruit vendor or vegetable vendor, he is collecting everyday money through UPI. Today, if he goes and applies for a loan, now, first of all, he will not apply for more than 5,000, 10,000 rupee. But even for that loan, he is ending up paying huge amount. And as you know, the operational risk is higher, collection cost is higher. So cost, final interest cost also is going to be higher. But here, because you are able to underwrite using the data available from account aggregator, you will be able to collect using eNash and from the UPI collection that he is making, etc. You can price your risk slightly lower and allowing this set of individuals to apply for small ticket size loan. Small ticket size loan as of now is extremely prohibitive cost wise to do. You may have seen 10,000, 50,000 rupee loan as a smaller ticket size, but to allow 500 rupee loan, it becomes extremely difficult to justify with the underwriting cost that you incur to underwrite that 500 rupee. So ultimately, this OCAN along with account aggregator and public credit registry is changing how you will underwrite small ticket size and still make good revenue out of it. The cost is expected to be around 20-25 rupee overall for the underwriting using OCAN framework along with account aggregator and PCR. Then we have ONDC, Open Network for Digital Commerce. Now this we have heard about in news articles, etc. This is a network of different marketplaces, network of marketplaces and sellers and buyers, right? Here the idea is very simple. You want to ensure that product discovery as well as service discovery is done in a democratized manner. Democratized manner is that you allow everyone fairly to search for the product, to buy or sell a product. This will change the way financing is happening. Supply chain financing is happening specifically on the fintech side, and it will create greater opportunity for supply chain finance through the entire ONDC framework. You may even see embedded finance product appearing within the ONDC, and that kind of integration will allow entire supply chain to consume this product very rapidly and easily without any friction. Then we have India Stack. Everyone knows about that, so I will not spend much time on that. But you have DigiLocker, you have API Setu, and along with that, interestingly, recently we have seen within the last couple of months there were two new initiatives which were brought in. Many people may not be aware about it, so let's very quickly look at them, right? So This is called Meri Pehchan. Just a moment. Now, this is government-based national single sign-on. You might have already observed single sign-on as a service available through social media, sign in with Google, sign in with LinkedIn, Facebook, etc. If you have observed, what it allows you to do is that you can share certain data points. So let's say Google, when you connect it with some service, it will ask for allowing access to your Google Drive, allowing access to your Gmail, etc., etc. Now, user, while signing in without registering as a separate user, you are able to sign in using social media. Similarly, this will also allow you to sign in first in government services, and because it is the open framework, later on even fintechs will be able to use this. And the power of this will be that, let's assume I want to, while signing up itself, it can be Aadhaar based sign up. In this, if you look at login option, there are three options available. You have DigiLocker, which is effectively Aadhaar based. Then you have ePraman, and then you have Jan Parichay. Now, if you are signing in with using your DigiLocker ID, you can then share DigiLocker documents while signing up. It becomes seamless experience. You are getting KYC done while you are signing up itself. You can collect different document directly from the DigiLocker. Even because it is national single sign-on, services from ABHA, National Health ID as we know it, those can be linked. Services from different other government services. For example, you have services around uh, education, services around travel and logistics. All those things you can share as a data point, and that can allow fintech to get better 360-degree overview of the customer while he is onboarding, and the underwriting can become much simpler. This becomes much frictionless, simpler for everyone in the ecosystem, and the cost will go down further. This is a new initiative, so you will see over the next 1 year this will evolve. But I am of the opinion within 2-3 years this will become part and parcel of your onboarding. You have another new initiative which is there around the health tech. Now, this is something which I wanted to highlight. What is health tech in India? And it will again allow insurtech fintechs to create new business models around health ID. For example, you want to file your claim. You can connect your health ID. Health ID will have all the policies. It can be verified. You already have today. Last month itself, IRDA has asked all the intermediaries or insurance companies to dematerialize all the insurance policies. That is the first step in order to link those policies with the health tech, your health ID. ABHA will become Aadhaar for health. It will allow you to connect all the different health records, and people can consume the health record similar to how account aggregator is meant to share financial information. Health tech will allow you to share your medical records, medical information with the consent. And very soon you will see insurance companies and some of the intermediaries in the health segment using this extensively. Then we have Digital Sky. Digital Sky is airspace map. This will be useful in agri, and it will be useful in agri insurance space because of that. So agri fintech and agri insurance will benefit immensely out of this, along with other segments which are non-fintech. Agri fintech and agri insurance will benefit from that. Basically, there is a national drone policy, and as a part of that, there are Kisan drones which are created, identified as a segment, and These drones will help to view the entire farming ecosystem, observe them, monitor them, and that will create a special ecosystem of different tools, IoT tools. For example, let's assume that I want to underwrite crop insurance. I don't know what is the current produce, expected produce, but by Kisan drones, you will be able to underwrite that by looking at the produce, likely produce that you can see. Satellite images also can help you there, right? But drones can give you much more real time and accurate picture. That is the idea. So that is what is coming up. This is live in some phase, and then the next phase which will be live will create the complete ecosystem. Now let's look at the Digiyatra and logistics tech. When we look at Digiyatra, it is partially live, but logistics tech which we have called iLog, that will be live within couple of years. In budget 2022, it was announced, and government and iSpirit, they are working on that. The idea will be to share entire logistics data, and this will change supply chain finance, it will change travel related finance, and the way you can underwrite those products related to travel and supply chain. Then we have Desh digital ecosystem for skilling and livelihood. Now you have so many fintechs which are focused on student, like you have EduFund, Finance Peer, many more. Now this ecosystem will be able to connect directly with Desh, and they will be able to provide financial product around student loan. Then you will have reward systems, and this ecosystem will grow rapidly because this will enable at a scale all these financial products, bite-sized products for tier 2 and 3 cities. As of now, it is only available for, let's say, tier 1 cities in India, but very soon, because of Desh Tech, you can embed financial product at a scale. Finally, government open data initiative. There are multiple different open data. While this is just the database which is available, those data points are fundamental to our data economy, and fintechs can use them for a better underwriting decision. Now, this segment is over. Any questions you have on this segment, feel free to ask. I will give you 30 seconds for that.
Yes, everyone, if you have any questions, please feel free to ask. This is a wonderful session going on, and I hope you must be having a lot of things to know. Let me check if you've got questions. All right, so there's one question, Vikram, so I'd like to read it for you. So can you repeat and elaborate on the participation of non-regulated entities in the AA system? I repeat,
Sure. Yeah,
they would
understood.
want
I
you.
got it.
Yeah, you got the question? Yes, that's the question.
So what happens here is that you have FIP. FIP is regulated entities which are providing the data. Now, non-regulated entities will not be providing the data, but they can be the data consumer. They can be the data requester, and we call them FIU, financial information user. Now, in account aggregator ecosystem, because you are sharing the data, then only you can consume for the regulated entity, which means that FIP can only become FIU when they are sharing the data. For example, SBI, as we speak, they are becoming part of the account aggregator ecosystem. Prior to that, if SBI wanted to become FIU, they cannot because they are not sharing the data, they can't consume the data. But for example, fintech companies which are lending, right, and they want some data for underwriting purpose, etc., they can work with some FIP to get this data, and that FIU did not share any data because they are not regulated entities. So the role of non-regulated entity here is as FIU, they will consume the data from FIP. I hope that clarifies the question. Yeah.
All right. So there's one more thing, sir. I don't know how it is looking now. Can we just increase the zoom in more the presentation because people wants to look at the presentation. A few of the things are not very clear to them. If you can zoom in more.
Okay, I thought
Yes.
it is clearly visible, but
Yeah.
yeah, hopefully,
Just little bit more. Yeah.
yeah, but it is on the full screen, so let me
Yeah,
see
that's
what
okay.
I can
That's
do. Yeah. Anyways,
cool. I think this works, sir. A
they will
little
get
more.
the PPT any which ways, so I think
Yeah.
they can zoom
Okay.
in. It is more about me discussing right now, so there are no textual things which you can
Correct.
ignore as of now. So that is okay. Yeah, I
Okay, sir.
understood.
Okay.
So any
Let's
other
continue.
question before we continue?
That was the only question we had right
Sure.
now. We can continue with the presentation.
Sure. So hopefully this is much more visible because less content on the
Yeah, this is
slide.
better than before. Yeah.
Yeah. It will go worse. In fact, there are segments which has
But
much
any
more
which ways, your
information.
communication is extremely clear, so I'm sure they shouldn't have any problem.
Sure. So this second segment is around as a service model. And when we look at as a service model through API, these are the business models which are emerging in as a service model. So first of all, you have API banking. Now we talk about open banking, API banking a lot, right? The idea here is that you want to work with banks for distribution and for consuming their product. Now, if you are a new fintech, you may need to work with 10 different banks. And it will be nightmare for you to connect and work with those 10 different banks. It will not be quick for you to partner with these 10 different banks. And before you start, somebody else may start, right, with them if they have better relationship. Now, the idea here is that there are companies like M2P, Falcon, Decentro, Upswing, Setu, Build, all these guys, they have already partnered with set of banks and they are combining these different APIs. Now, let's assume HDFC Bank has one API which accepts 10 different things and gives you 5 things. ICICI Bank has API on account opening, same set of API on account opening, which requires 15 different things and gives you output for 3 things, right? Now, this people will help you get one single API, which is a combination of multiple different banks API behind the scene, so that when you consume one API, whichever bank you want to work with, you can work with them and you can provide your input in a standardized format and you get output also in a standardized format. So when you are starting a new fintech, then it becomes much more easier for you to partner with such players which are helping you build fintech products by integrating with the banks so that you don't need to integrate with one by one, right? I hope that is very clear that banking as a service, when you want to provide, right? API banking is the most convenient way for you to integrate with different banks. And unless you integrate with the bank individually, it will be difficult. So companies like M2P, Falcon, etc., they are helping you connect with this all these different banks by working with a single entity, right? That allows you to go to the market very quickly and your cost also relatively goes down because your development effort is much lower. Your integration effort and development effort is much lower. Some of them also handhold you to help you out with how to integrate, etc. So that becomes much more easier. Then neo banking as a service. Now, what is neobank? First of all, people may not know about them, right? So neobanks are a new age bank where it is completely digital. There is a difference between digital banking and neobank. Digital banking on one end means that existing banks are providing services or products through digital channel. That is a digital banking. But neobank is completely virtual and digital. And when you look at in India, as I discussed, due to regulation, you need to work with the banks. But neobanking will help you offer whatever service a typical bank provides by partnering with multiple banks and picking and choosing best of all the different banks. To give you an example, let's say you like Kotak Bank's home loan product, for example, and you like ICICI Bank's current account or demat account product. Now, neobank will help you achieve that easily because they have partnered with multiple different banks and they are bringing best of different services under one umbrella, under one interface, which you can use without worrying about integrating with multiple different banks or working with different banks, looking at different statements. That becomes much more easier for you because they have partnered with multiple banks. And if you want to create neobank, let's say you are a new fintech and you want to start your own neobank, you want to distribute banking product, then you can work with companies like NeoCred, NeoWise, PaySprint. And by working with them, similar to how API banking players are doing, they are providing more products because API banking is more focused around, let's say, card stake or lending stake. This neo banking as a service allows you to combine multiple different products, and that is how you can create your own neobank. Then you have API marketplaces. There is a difference between API directory and API marketplace. So what typically happens is that when you are integrating with one service provider, you will need to get API key, which is your credential for that API. So you need to register with 10 different API providers, manage 10 different API keys, and then integrate everything together. API marketplaces allow you to directly work with this marketplace. Integration becomes much more easier because they are managing that backend part. When you are looking at the marketplace, it allows you to discover different APIs. So let's say I want to onboard the customer. So I may require onboarding API, but I don't know who are the players in the market. So I can go to marketplace, search for different APIs within that, and pick and choose what I want. I may want to expand into different market or geography. I am currently doing in India. I know Indian landscape, but I don't know in Singapore with whom should I partner. To give you a simple example, let's say when we look at Rapid API, this is one of the most well-known marketplaces. And if I want to search for the product and services, right, I will quickly sign in and show it to you. Okay, so let's say I want to find for fraud-related API. So fraud APIs, I have Fraud Score API, I have Fraud Sentinel from different players. There's a rating which is given to me. So this becomes easy for you to discover those services. And second thing is that integration also becomes much more easier because all these services are easily integratable due to Rapid API as a aggregator marketplace. And you can find out free services, you can find out paid ones, and you can see collections also, right? And because of that, you can get everything under one umbrella. So expansion into different geography, you don't know whom to partner with, you will get better reviews which are there, and you can identify which should be the partner. Let's look at the next part of this, which is insurance in a box. Same concept, you want to create your own insurance distribution. So you have players like Discovery, Last Decimal, Turtlefin, Bima Plan, Simbo. All these players, what they allow you to do, because they have integrated with all the different insurance companies. There are 33 odd insurance manufacturing companies, and what they have done, they have integrated with most of them. So let's say you want to create your distribution business, you will directly integrate with Discovery, and then you can provide broking service, right? Because you want to allow your customer to compare between different insurers. And this can become much more easier. You can create broking company once you have the license without working on the tech stack. Entire tech stack is readily available. You just need to create the front end. The experience layer you can create. Backend layer is available readily. Lending as a service. Now what happens is that today you have so many lending variants. BNPL, for example, revenue-based financing. You have personal loan for specific purpose. Now, all those different things you want to provide as a service, you have again distribution business and you want to integrate with this product. Today, you have players like UB Bharatex, which they provide lending as a service, and it becomes much more easier, like 3-click integration or 4-step integration. Just to give you a simple example, right? So let's look at Bharatex as an example. So here you can see what are the products which they offer, right? So you have zero risk, 2R integration, white labeled. So which are the products available? Try and buy, pay in 3, pay later, postpaid, and then you have certain players who provide revenue-based financing also, right? So here it becomes much more easier for any lender or distributors as such to integrate or embed this product in their journey. So let's say Make My Trip or any other player who would like to embed financial product, they can do it within 3 steps, right? So that becomes much more simpler for the players. Then you have wealth management as a service. Wealth management as a service is all about creating robo advisory as a service, allowing you to provide distribution service where the automation is done, CRM is management is allowed. And I will give you example of Bamboo. Let's assume robo advisory service you want to provide to your customer. You have amazing set of product that you already know about. You have various and multiple alternative investment product that you know about. Now you want to recommend these products to your customer based on their risk appetite, based on their lifestyle, life cycle, and you don't know how to build robo advisor. You just know that if then statement, you know, these are the conditions, this is how you can do. But how to allocate portfolio mathematically, etc., you don't know how to build it. That is when players like Bamboo, etc., can allow you to integrate with their system, create a custom robo advisory model, give it to your customers, and start your own robo advisor. Finally, RegTech as a service, you have OneTrust, Skyflow. Now, OneTrust, I will give you a couple of examples here. OneTrust allows you to have compliance around GDPR. GDPR, onboarding, vendor onboarding, GDPR, cookie management, right? All these things are provided by OneTrust. To give you the complete overview, let's look at their services quickly. And there are again multiple players. I'm giving some top in the industry. So if you look at solutions, you will see by regulation, different regulators are there, different regulations are there. And for every regulation, whatever compliance is required, they are providing compliance as a service or RegTech as a service. Or by trust domain, you will have again privacy management, data governance, consent and preference, IT risk and security assurance, all those different risks that you want to manage, GRC as we call it, you have solutions available to that. Then, if you want to look at specialization, so Skyflow kind of a company provides you with privacy as a service. And let's assume you want to provide payment service, right? You can provide payment service or payment gateway services by creating a vault immediately and tokenize everything. Today in India, it is compulsory any which ways, but across the globe, when you think about it, you can use Skyflow API and forget about compliance on your own. They do the compliance. They provide you the certificate of that compliance. You can rely upon that. So there are products like PII Vault, personally identifiable information, PII Vault, which is under GDPR. Fintech Vault. Now, Fintech Vault includes payment related services, lending related, and insurance related. And this vault again is compliant, GDPR compliant, PII compliant. And then you have healthcare vault, right? So these are the vaults available as a service. And believe me, it becomes much more simpler if you don't need to comply. So you save cost there, and integration here becomes much more faster because user friendly and developer friendly APIs are available. So the cost both ways goes down, right? Coming back to this slide, this segment is over. If you have any questions, I will give you 30 seconds to ask them. before we move on to the next segment. This entire section was on as a service model.
Yes, anybody? If you have any questions, please ask. Let's make this session a little interactive. You know, if you have more questions, we'll be able to understand things in a much better way. I think we do not have questions as of now,
No
but
worries.
I'm sure they'll be shooting some more questions as we
Sure.
end the session. Yes, we can continue the session.
Right. I think this is not easily visible, so I'll try to zoom it a bit.
Yes.
Yeah. Now, this is the payment landscape, different products which are there in the payment in India, across the globe. We will try to see how this ecosystem is evolving. What are the different business model product variants within this? So first and foremost, you have official UPI based product. So Beam already you know, I don't need to discuss around that with UPI 2.0 features. Now, what is UPI 2.0, right? So under UPI 2.0, there are multiple features which are available. We'll discuss them in detail after some time, but they allow you to create some financial product with integrated or embedded payment features, right? E-rupee is person specific and purpose specific prepaid instrument. Now it is going to replace almost all the gift cards or prepaid cards which were used earlier, because the cost of issuance of e-rupee is much lower, and now because it is person and purpose specific, you can have better oversight, you can do better governance around what you are issuing. It can be only issued by government and corporates as of now, not individual. And e-rupee was introduced in September 2021, mainly around DBT that government had to provide for COVID vaccination. COVID vaccination, as you know, if you just transfer the amount into beneficiary's account, you cannot control the end use. You don't know whether the amount that you are transferring as DBT will be utilized only for the vaccination. So e-rupee becomes prepaid instrument where the amount is stored. There is a QR code which is generated, and that QR code can be scanned, or there is a code which is given to you through SMS, and that code which is there through SMS, you can provide it to the supplier or vendor or hospital, in this case, vaccination or lab. And once you provide that, they can scan. You need to provide your UPI PIN on your application to ratify, verify. And once it is done, or basically OTP you can provide. And then once it is done, the transaction is done. Today, you can only do it completely, like complete amount you can use, and anything else which is remaining will go back to the issuer. But there are options available. Let's say you want to replace Sodexo coupon. Then what you can do is that as a employer, you can issue this e-rupee vouchers, and you can allow them to reuse, which basically means that issuer should allow for reissuance of the balance amount. By default, e-rupee will get consumed completely. So I have 1000 rupee voucher, e-rupee voucher, and if I spend 600 rupee, then by default 400 rupee will go back to my employer unless and until reissuance is enabled. In that scenario, if I spend 600 rupee, I will get another e-rupee voucher of 400 rupee. That is what will happen. Okay. APS, Aadhaar enabled payment system, we all know about it. It is using biometric, you can make a payment. Recently, UDI has announced that they are also putting liveliness check so that fingerprint cannot be just faked, right? You can't copy fingerprint by silicon gel or something and use it. There are a couple of new products which are there. There are um, products like UPI 123 Pay or UPI Lite, which are now live on BHIM, not on any other app, but on BHIM. UPI Lite is recently launched, so it is live. Interestingly enough, when you look at, right, UPI Lite is offline UPI payment. That is what they have envisaged. And when I say offline payment, online credit, which means to refill your wallet, you need to have online credit mechanism. You require internet or network to fill that. There is a limit on the wallet size, 2000 rupees what you can keep, and a transaction limit of 200 rupees kept. Why this is done? This is done to declog the NPCI's entire UPI network. Today, as per the analysis, around more than 50% of the transactions on UPI network is less than 200 rupee. So if you can take them out and you do periodic settlement rather than one by one, that can save lot of network bandwidth. And because of that, UPI Lite will allow offline transactions and it will declog the network. It will increase the efficiency of the network. UPI 123 in a way is quasi offline. It is not completely offline. It means that it can work without internet but not without the network. There are models which are planned which can work on data over sound, for example, Tonteg, etc. It can be offline in future, but right now it is with network only. In this space, you have a couple of startups working. You have Tonteg, which allows for data over sound, and then you have Missed Call Pay, like a startup which creates a virtual number for every merchant. You can call that merchant on that number because it is similar to the QR code. Once you call them on IVR, you can make the payment because that is specifically for that merchant, issued to that merchant. Or you can have a common number where you need to enter the merchant ID or code, and then you can make a payment if merchant is not having the unique number, a unique phone number. Of course, every merchant will have a unique number so that whenever you are calling a common line, you can enter that number. USSD is something which is similar to how you used to check your mobile bill earlier or mobile balance earlier, *121# or *111#. Similar to that, you can enter that. But unlike your balance check, which number used to be different for different operator, *99# is common across all the operator. There is a 50 paisa cost or something like that. There is a cost for that. And this does not require any internet. It can work on feature phone as well. Then you have FASTag, which was on UPI. As we know, recently it is announced that FASTag will be replaced by number plate recognition. And let's see where it goes, but it is still under development. UPI number is a unique number across all the applications. So for example, earlier what used to happen is that you have VPA or virtual payment address different for different third party application or TPAP as we call them. And now you can have UPI number which is common across everything. It becomes easier for you to work with that. And Bharat Bill Payment System, BBPS. These are UPI based product indirectly or directly. And UPI 2.0 features, let's come to that. There are four major features within that, and one of them, like one is OD against your account. So you can link OD against UPI, overdraft against UPI. Then there is a signed intent, which means that if somebody is trying to tamper with the QR code, it can be identified, signed intent in QR code. So it becomes tamper proof. Then you have invoice in the inbox as a model, which allows someone to send invoice with the payment link. And one feature is UPI mandate. And as a part of that, you have UPI auto pay as well. Now, under normal UPI, you have more than 300 banks which are partner, but on this, you have around 3940 banks on UPI auto pay. One of the features within that is similar to ASBA, where you can block the account. You can block the account and then you can release the account, right? So hold the amount and release the amount. Based on that, you can create new business model. There are applications which are available which uses them. Just to give you an example, this can become hold now, pay later model. Just to show you how it works, let's look at one such live example of Osta. So they have used this autopay in a way for you to create a wallet, virtual wallet, where let's say you have 1 lakh rupee in your account, you can keep on hold 10,000 rupee, it will create hold now pay later model rather than buy now pay later model where there is no security as such. Here you are holding, and then let's say after 15 days when you want to settle, if 10,000 rupee is held, I have spent 6,000 rupee. At the end of 1 month, 4,000 rupee will be released, 6,000 will be debited. The benefit here is that it is not debited immediately, so you are still getting benefit of the interest that you are supposed to get. But at the same point in time, the risk goes down. You have seen in today's environment, buy now pay later across the globe, they have faced NPA issues as high as 15 to 20% in some cases. So buy now pay later model, if you want to make it more secure, it can be hold now pay later model. And this is one such example where hold and release is the mechanism which allows you to do that. I think there is one question on the chat window.
So I have shared like two, three questions together with you in the chat box. So there are like two, three questions. One is, do we envisage ONDC or OCAN,
Correct,
as you
correct,
can
correct.
see, and then
So
the
I will answer one by one very
yeah,
quickly. So do we envisage ONDC, OCAN, hashtag and hashtag working together?
sure.
Definitely yes. The idea is that because it is government-led project, the idea is definitely to do that. Allow the ecosystem to integrate with each other, use all the different services which are there. Single sign-on is one step in that direction. And it is through API. Of course, it is going to be through APIs as well as front end. For the end user, look, APIs are for developers. For end users, you require UI UX. APIs allow you to integrate the backends, right? But UI UX is required, so it will be both. For developers, it will be API, and for users like you and me, it will be a front end, like DigiLocker, right? So you have requester API, you have issuer APIs, but as a user, we are using simple front end. Further, what is the cost of building system for startup to run these APIs with their system? Look, cost depends on how many APIs you want to integrate with, right? And how complex are these APIs to integrate with your system. To begin with, it is not that costly. If you are even outsourcing that to integrate with few APIs, right? It may cost you a couple of lakh rupee to start with, but I would recommend that you hire your own CTO or developer, etc., so that as and when API changes, API also changes, right? You can easily integrate and or update your APIs, right? That is much more preferred option. But yes, initially, if you are building the solution, you can outsource it to some vendor, IT vendor. That is possible. Then we have next one. Are API banking, ONDC, OCAN architectures available for companies based out of India? API banking, yes, because API banking or open banking is a global phenomena. You have different providers. So let's say episode 6, there is a company which provides open banking for entities in UK, Singapore, etc. Then you have different entities for US focused companies or APIs. So definitely API banking or open banking, yes, it will be country specific architecture and framework. ONDC and OCAN by nature are India centric. However, ONDC, because it is the open architecture based on backend protocol, etc., you can implement if you want to, and it can be used in any country. In fact, India's tech in general, using India's tech.global website. So let me go back to that very quickly and show you. This is launched in last basically 1 month ago. India's tech.global. So on 15th August, this was started. It is the global initiative where other countries who would like to implement this, right? It is not like that you are integrating with Indian APIs. You are creating your own set of APIs, right? On top of the data or the architecture which is provided to you, and the handholding will be done by the respective department, right? So smaller countries, let's say Laos, let's talk about African countries which are there. They may want to use this framework. This is country specific. Companies may not be able to apply because this is a country specific framework. So in case tomorrow, if US decides, unlikely, but if US decides to implement UPI because they are coming up with their own UPI like system called Fed now. But let's assume they wanted to replicate UPI. They could have done so. To give you the overview, every framework that you see here has its own architecture that they have provided and the contact person if you want to implement that, right? So modality, the architecture, how it works, the complete architecture is provided and the contact details along with the open source tools are available. Contact us, whom to contact, right? Everything is given. So those countries who want can connect with that and get things done. But for companies, as I said, not possible on ONDC and OCAN outside India, not useful. Unless they are trying to provide services in India. Can you please explain the backend of broker that you are mentioning? I don't know which broker you are referring to. Maybe you want to give some more clarity on that. Backend of a broker. Can just give more clarity on which broker you are referring to. How to regulate management as a service. Okay. Management as a service. How to regulate? Or you are saying as a service model in general, right? You don't need to regulate as a service model because you are anyways regulating all these banks, NBFCs, and when you think about it, in general, RBI has issued digital banking guidelines or they have issued around what kind of security you should have. So those are applicable even to API. You need to follow those standards, security standards, best practices, even for APIs. APIs open up new attack vectors. So you need to have, when you do the VAPT as we call it, right? That audit will identify those security loopholes. So those things are indirectly covered. You don't require a separate regulation for that as such. But open banking in general, if you want to cover, account aggregator is one step in that direction. From the regulatory point of view, if you consider account aggregator, right? Why do you think RBI came up with account aggregator NBFC as a separate category, NBFC AA as a separate category? You only have currently 6 live licensed account aggregator in the market. It is done because they wanted to regulate this set of open banking part where the financial data is shared. Data sharing part they wanted to regulate. So they have done that. Hope that answers your question as well. Any other questions you have, feel free to ask. And whenever it is posted, I will answer those questions.
So as of now, only we have these questions. We can continue with the presentation.
Sure.
So I'll keep on sending the questions as it comes.
Sure, noted. Continuing our discussion. So after UPI based products, let's look at the innovation which has happened in the traditional payment itself. So you have cardless withdrawal, which you have seen. How it works basically is that you can have code on your mobile, etc., and then you can enter that, and that can do that entire transaction without the card. Instant money transfer is the way for you to send cash to someone, allow them to withdraw cash without having the card or bank account. These products were there earlier as well, but not well known. So I've just covered this for your reference. Digital banking unit recently announced. There are 73 digital banking units that they wanted to create. It is similar to a kiosk which is there where all the different services you can provide, and traditional banks will be providing this, right? So digital banking unit is experience center where different products and services by traditional banks can be put in a remote location. This becomes much more easier, and digital banking unit is still evolving. We will see how it goes, what happens, but in my opinion, it is the right step and in the right direction. Let's see. Credit card tokenization from the 1st October, as we all know, it is going to go live, and it simply means that you are tokenizing the card, so the risk is lower of data breach. Merchants can't store that. I mean, merchants can't store the credit card information. They are shared a token, and that token is device specific, merchant specific. This will enable new business models like you have one ring with NFC within that, can include multiple different cards, multiple payment instrument, and can be used as a payment or keychain, for example, or even your browser, because RBI in their updated notification even allowed desktop computers as a valid device, and within that you can have a browser-based wallet. So when you think about it, in Web3, we have seen MetaMask as a popular wallet. Similar to that, you can have a wallet, let's say Paytm wallet or some other wallet in your browser. And while you are making a payment, that browser wallet can pop up, and on one click, that payment can be done, right? So that can become a new business model. Then let's look at new age credit card, virtual card. This model, as we know, has undergone drastic change given the RBI guidelines on PPI refill using credit line. Because now it is not allowed, these guys are going for the traditional term loan product. Slice, for example, calls it purchase power, but ultimately it is the term loan product. So this has undergone drastic change. So I wanted to highlight that clearly. Then we have convert to credit card and commercial card. Now these models are evolving where, let's assume you want to make society bill payment, or let's say I am the director of SPGN School of Global Management as well, where I teach fintech, and as a part of that program, you are applying, but I just accept payment using bank account. But you want to convert that into credit card payment. Fortunately, now you can do that using this model where players like ShopSay, Paymetrics, Bharat Next, these guys are allowing you to convert your invoice payment, credit card into credit card payment. Let's say your society maintenance bill of 30,000 rupee, you want to make payment using credit card, you can do that. The revenue model there is very simple. They charge premium on that. You are making payment to them, and they are making payment to the final merchant or vendor. So the settlement they are doing the final part. So for the merchant or the vendor, they are indifferent given that they are getting the amount in their bank account which they wanted. For you, you are better off because you are able to convert that payment into credit card, and maybe you want to avail EMI also, you can do that. For ShopSay, they are not taking additional risk. They are not underwriting anything on their own. If you have existing credit card, then only it works. Any credit card, any company, right? So basically, your credit card issuer is underwriting that transaction, but ShopSay, etc., are giving you that option to convert your regular payment into credit card payment. Commercial cards, let's say Bar Next, other players are offering similar concept, but it is a B2B payment rather than B2C payment or C2B payment, right? Merchant super apps. Now we already know about Paytm. You have payment super apps which allows you to have multiple things together. Like you have Paytm Mall, you have even Paytm services around investment, postpaid service. So you have Paytm Postpay. All those things are merged together. So it started as a payment app. Similar to that, you have K-Mall by Kotak. They become a payment super app. Then you have payment aggregator and payment gateways. Based on the regulatory guidelines, recent guidelines, you are supposed to have a license for that now. Earlier, you had so many players in this market. So RBI wanted to regulate that as per the payment vision that they had published earlier. And now also, it is in line with that where they want to regulate all the critical players in the ecosystem. And as a part of that, they have as of now issued licenses to around 10 odd players. 185 players had applied on that, and around 10 odd players as of now had got the license. RBI is very clear that they are going to ensure that the licenses are only given to players who are not into crypto or gambling, etc. Looks clearly based on the overall licensing that we have seen. And in future, because of this, the margin may expand because you had so many players, so competition was huge. Now, once consolidation happens, because not everyone will get the license, once the consolidation happens, you will have margin expansion, which is good for the industry. And another impact will be that people will be more solution centric rather than product centric. Today also you see that, right? So let's say ease was, they focus on collection part, industry specific solution. Razorpay, they also have now built a neo bank called Razorpay X, which uses payment as an anchor point to cross sell different services, right? So this becomes more solution centric approach. Then we have payment switching and routing infrastructure, where you have payment aggregator who are there in the market, and you are creating payment gateway for aggregators. Just Pay, for example, gives you that kind of a switching service from one gateway to another gateway. INAI, Pine Labs, many players are there who provide this payment infra of switching, routing, etc. It also includes a service where, for example, you are operating a marketplace. On that marketplace, you are supposed to collect 20% commission and 80% should go to seller. To make sure that you are not collecting 100% first, because it will have GST compliance issues and challenges, or TDS compliance and challenges, what you will do is that payment gateway will only disburse the marketplace 20% and remaining will directly go to the merchant. By doing this, you are reducing the compliance cost. Those things are possible as well. Then we have cross-border payments. Under that, you have infrastructure provider like NEOM, FIS Global. They provide the infrastructure on which you can build global cross-border payment applications. They are providing you API stack. Just to give you an example, what kind of services that they are providing. Let's look at NEOM. Now, they have different countries, they have legal entities in different countries. So if you look at network, yeah. So this is their entire network. You can see in how many countries and locations there are present. Let's say we are looking at India. So here you can see in India, you can have INR as a currency and pay in and payout are allowed. You can't have issuance, card issuance directly. But if you look at, let's say, United States or Singapore for that matter, you can have this many currencies. It pay in, payout, and issue cards. All three services are available from the NEOM network. Now, how do they do that? So, as I mentioned, they have their own licenses in different countries. So let's say in Singapore, NEOM PT Limited is licensed entity by MAS. In India, they have NEOM India Private Limited. It operates with SBM Bank and it is licensed by RBI with approval letter. So all these things. So here, rather than you as a new fintech setting up all these entities and incurring compliance cost, this is how the aggregation model really works, and the cost goes down by 80-90%. When you are looking to create your own neobank, cross-border neobank, just to give you an example, we will see again is a part of neobank, but let's say Hope Money or Neo Global, right? Neo. Both of this player, they utilize this sort of framework, right? It is a cross-border neobank. So they work with NEOM to provide these services. And the idea here is very simple. The cost of integration goes down, as well as you have more better experience around the same product. It is a specialized neo bank as a service. Let's come back to this. Okay. Then you have retail cross-border payment like TransferWise earlier. Now it is called Wise and Book My Forex. In India, again, due to RBI regulation, you need to work with authorized dealer. But in general, Wise operates their own Nostro accounts with different countries, and then they do settlement through that, right? But this retail cross-border payment services allow you to do all the compliances, including, let's say, LRS filing, and it allows seamless experience without any friction. On the wholesale B2B side, you have FedExPay, PayLoBiz, Worldline, Flywire. They allow the same thing, but B2B means that it is more tailored towards the businesses. They are into collection, international collection, remittances. And when you look at their margin is slightly lower than the retail margin, goes without saying, because it is a volume game that they are playing. And last few years, we have seen this industry grow at rapid pace, given the LRS, etc., which is available. Pay later model. Buy now, pay later, we have discussed in brief. Very quickly to summarize again, you are able to make a payment after a certain number of days, and it starts as a convenience product. It is by default not a lending product. It by default is a convenience product. But if you want to convert into payment, it bridges the gap between payment to lending. You can pay it later after 14, 15 days, whatever is the timeline, without any interest. But beyond that, it gets converted into a loan product, and that is what it is. Most of the times now with RBI guidelines, many players have converted this into directly credit line, not as a BNPL, which was a pooled credit line. Now it is an individual specific credit line that you are getting rather than the pooled line. Earlier, it was a pooled credit line, which, let's say, players were using, and it allowed you to have more efficiency. To give you an example, let's say Lazy Pay, when you are paying using that, you are given limit of 10,000 rupee, but effectively, on an average, any user might be using only 40% of that. So you have, as a Lazy Pay 10,000 user, to all of them you have given 10,000 rupees as a limit. But when you are actually utilizing the credit line from the regulated entity like bank NBFC, you may only go for 50% rather than 100%, right? Given that on an average, utilization is lower. But here, however, with the new guidelines and the way people are working, it is individual specific. FLDG also is right now gray area. How industry will look at it will differ. There are industry practitioners who are saying that since it is not categorically disallowed, people can still use it. Certain legal firms are saying that no, because the circular reference is given, it means that you can't, third party can't do it because you are not taking on your book. So you can't give first loss default guarantee. So there are legal challenges which are there right now, which is not clear, gray area. Similar to that, when you look at hold now pay later, we have discussed that. I will not touch upon that again. Save now pay later. Now this is more around investment, but it starts with the payment, right? And payment you will find everywhere, whether it is lending, insurance, wealth management. Payment will be one of the legs. And this is more around payment. So we are including this model under the payment. Save now, pay later is more around goal-based investing, where you have a goal. But here, the main difference vis-a-vis goal-based investment is that you are able to partner with certain brands first. In goal-based investment, normally you decide your own goal. It can be a custom goal. Here in Save Now Pay Later, on the platform, you will see certain categories where they have partnered with, where the platform has partnered with. To give you an example of multiple, let's say this is the company. You have different categories. Let's say you want to buy iPhone 14. You know that you can plan it. Even after 6 months or 1 year, iPhone 14, you are still okay with that. Or travel, you can plan it, right? I want to maybe travel outside India after 1 year. Whatever you can plan or whatever things are consumer durables, you can put it under this model. Here, since you are working with the brands, what you will say, you will put MRP. Let's assume the normal iPhone 14 is costing you 1 lakh rupee. You will put MRP. Now it will ask you to do savings every month. And because there is a discount that they are able to give you, they will show as if that even after paying discounted amount, you are getting much more return. So they quote return in IRR. To give you an example, they may tell you that you are getting 16% IRR because they were getting 20% discount in the price itself. And by doing so, your selling point becomes much more obvious. Your customer is happy. Even for travel, right? When you are planning at the last moment, you may end up paying premium for that same ticket. If you are planning in advance, you will get discount everywhere. So your effective return, as they show it, becomes very high. It can be as high as 30-40%. So this is another model, which is save now, pay later. Coming back to this, you have travel now, pay later, which is similar model. I'm not going to discuss that again, but it is the same model which is there. Then you have digital escrow account. Now for multiple different services, you may require digital escrow account, and these companies provide you digital escrow account as a service through APIs. For example, EscrowPay works with ICICI Bank and other banks to provide you digital escrow account through API. Now, who will use it? You have rent payment companies who may want it. You have P2P lending companies which may want it. You have anything which is digitally done and you require trust, you can use it in the payment, right? Now, in using the digital lending guidelines, if you look at, right, specifically on digital lending guidelines, the fund flow structure has undergone the change. What is that change? Now you cannot directly collect the money as a fintech from the user and give it to the regulated entity. You need to directly work with the regulated entity, means that customer will work with banks or NBFC directly without working with the fintech company for the fund flow, which means that digital escrow account which were involved in that will no longer be allowed. So it will impact these players a bit, but still there are enough use cases which are there. Then we have pay with rewards and social influence. Now this is a new model, emerging model, which is new, recent. You have TwidPay or SciPay kind of a model, which aggregates different rewards, right? And allows you to make payment using them. Similar to that, using social influence, you have Jellybuzz kind of a model. So you are influencer, you are a TikToker or you are a YouTuber, you have good following on Instagram. There are brands who are happy to give you some return, so you can pay using a post on Instagram. You promote a brand on Instagram and you get money because of that, right? So let's say you are the influencer and you want to buy iPhone 14. iPhone 14 may have partnered with Jellybuzz, so you promote iPhone 14 on social media, and iPhone 14 will allow you to make a payment based on the number of followers that you have. So let's assume you have 10 million followers. It might be possible you will get free of cost. If you have 1 million follower, iPhone 14 may give you 40% discount and you just need to pay 60%, right? Something like that. So they have issued their own card, etc. And this is available. Then one-click checkout and payment. This is where the journey becomes very critical in e-commerce market. You are only going to have a payment part when the checkout happens. So you want to make sure checkout happens as soon as possible. So you have one-click checkout and payment applications like Nimble, Express Lane, Faster. They integrate with e-commerce platforms like you have WooCommerce, Shopify. They integrate with them and allow users to check out with one click and even make payment with one click. So they identify based on the mobile number, etc., that this is the third party application PPAP, like Google Pay is being used by that user. Automatically the payment link will go, payment request will go to that VPA. So the entire process becomes seamless. You don't need to worry about the dropout rate. It reduces dropout. Then under blockchain and Web 3.0. Now, blockchain and Web 3.0, this is again interesting. DeFi, decentralized finance is evolving. And Visa B2B Connect is blockchain based solution, DLT based solution. Using Visa's network, you are trying to mimic Swift on Visa network. Use of blockchain is very simple here because it is always in sync. You don't require reconciliation. Record sharing becomes very quick and final. Settlement will happen as per the normal settlement cycle because it is still working on the traditional fiat model. It is not using cryptocurrency, etc. It is using traditional model. We are not talking about crypto at all. It is all around traditional finance. Blockchain you are using in order to make it more efficient, transparent, and putting more governance. Then you have Swift GPI and kind of a HIPTO, which allows you to convert from one market to another market, and CBDC, which we will discuss more in detail, central bank digital currency. So CBDC is something which will allow countries like India and others to create a robust framework around the policy implementation because CBDC is directly issued by central bank. It will allow central bank to fine tune their policy better because it is directly distributed. So your impact will be much faster, instant. Also, if required, you can have greater transparency in the fund flow. Terrorist funding can be reduced. You can identify those loopholes quickly. CBDC also supports smart contracts if it is created on DLT or blockchain. It can allow you to, just to give you an example, right? Today you are paying GST immediately whenever you are raising the invoice. On that month or end of that month, you are supposed to pay GST. Not on the collection, but whenever you raise GST invoice, by 20th of the next month, you are supposed to pay that. Similar thing is true for TDS. Now, what if using CBDC, there is a smart contract, you raise the invoice, CBDC will automatically deduct GST as and when the payment happens. That is a smart contract which will deduct the GST automatically when the payment happens, not when the invoice is raised. By doing so, you are reducing working capital requirement drastically because today majority of the working capital requirement is for payment of GST in some of the cases. And when you think about SME, they want to make sure that the payment happens as soon as possible, but it may not happen. So what you are trying to achieve here is that create a smart contract on top of CBDC, work with your traditional fiat, and make sure that the settlement of government taxes is automatically done. This is one use case, and there can be multiple such use cases when you think about smart contract. Now, smart contract is nothing but a program which is written on blockchain. So it is a program written on blockchain which can include those terms, explainable terms, and it will allow you to execute it irrespective of whether those parties are there or not. Then we have micropayments. You have micropayment on media consumption, like consent allow you to consume those articles at 1 rupee, 5 rupee, 10 rupee, 99 rupee per month, right? That is the micropayment. So consent allow you to do that. You want to consume a video, again, you can pay for that video only, pay 2 rupee, 10 rupee, whatever. And then you have MasterCard smart contract. They have created this platform using which you can debit once, let's say $10, debit once and pay 1 cent without incurring additional cost. Finally, we come to payment fraud and monitoring. Now this becomes critical because as payment industry is growing, even frauds are growing, right? So today you have entities like TronaPay, Similarity, Radar by Stripe. These are the global ones, right? Similarity, Radar are global ones. Clarify again is global. Third Watch is by ReservePay. They have acquired this company. So basically, this different providers help you with certain fraud identification. Now, we'll discuss what are the frauds that they can identify. Number one, on the UPI side, merchant reputation. That is what they can figure out. Based on the transaction flow, you can identify whether this is the genuine merchant or the merchant reputation can tell you about that. Similar to that, buy now, pay later, you want to identify the risk within that. They can do that. You can have AML issues, they can figure it out. There can be location based triggers, data points which they can figure it out. So this becomes much more useful when the payment fraud analysis is done. On the blockchain also, there are companies like Chainalysis. They allow you to identify frauds on blockchain. Regulators around the world work with such companies to identify money laundering, identify cyber crimes, identify terrorist funding. Those are happening on the Web3 front. So now we will address some of the questions I think which you have asked on the chat window.
Yes, Mr. Vikram, we do have questions. We have two more questions. You can
Have
see in the
some
chat box.
operational organizations put payment have NIM operational organization put payment super apps on hold for the time? I think this question is not making sense because super app and NIM they are two different things, but maybe they are two things combined together. So I will answer that way. I will assume certain things here. First of all, is NIM operational? So yeah, NIM is operational. Super app, payment super apps are nothing but payment as an anchor point and providing other services. You can even call them, there's a quasi neobanks offering multiple different services. But this is what I think about the question. I'm not too clear about what is that question all about, but I have attempted to answer that. Will HDFC Bank credit card have different tokens on for my smartphone and laptop? Absolutely correct. Even for the same merchant, for different devices, you will have different tokens. So for example, for my mobile phone, when I have tokenized, because my phone is NFC enabled, right? So I can make a payment using contactless payment. Whenever I go up to 5,000, you can make. So a token which is created on this will be different than the token which is created on my desktop, even for the same merchant, because it is device specific and merchant specific token. Correct. Okay, so I think I have answered those questions. In case you have any more questions, feel free to keep on asking. I will accumulate them and answer them one by one.
Yes, everybody, please do give us questions. We would be very happy to answer all your questions. And we just have a few more minutes to go in the presentation. So don't miss this opportunity to ask all kinds of questions to Mr. Vikram.
Right. We have time till 12 o'clock, so make sure that you
Yes.
utilize that time up to
Make the most of it.
Next, we have distribution framework. Now, the order-wise, of course, it is fine because I wanted to discuss distribution first, because once you know about the payment as a product, now let's look at how they are getting distributed, right? And other products also. So you have new age correspondent banking platform like Pay Nearby, Spice Money, RNFI. What do? They use existing retail network, retail Kirana store network or other network. They empower them to cross sell these products. And by doing so, they have created a network of this Kirana stores, etc., which can distribute these products. So IMPS, for example, can be done by this player. AEPS, Aadhaar based payment, right? They can do that. And this enhances financial inclusion because tier 2, 3 cities, it is impossible for bank branch to expand everywhere. But with this, every Kirana store can become a bank. Then you have referral based and agent led distribution for all products. Now this is Misho movement for finance. Misho, you know, you don't require a store or inventory of your own. You can work with existing seller. Misho will handle everything and the distribution is just done. So let's say you are individual, you have your friends and family and your network. You can sell through WhatsApp. You send the link, you explain them the product if they want, and you get commission when it is sold, right? So Gromo, Bank Sathi, One Code, these are the platforms which are around referral based, right? And then you have agent led distribution as well, where you have agent network. Traditional banking correspondent that you had, agents that you had, now you are getting aggregators of that agent, right? So Unwealth, Finky, Novak, all these players are part of that. Then you have specialized insurtech distribution via agents and PSOP. So you have brokers within that. You have network of agents. So Policy Boss, Beshak. This is another new startup which is there. This allows this POPs, or as we call them, this agents, to distribute this product by looking at the overall recommendation generated by the system. So think of this as a robo advisory for insurance, followed by distribution network. Robo advisory for insurance provided by the tech side, and then you have distribution going through the agents. Because you may not be able to ensure the same quality across all the different agents. So robo advisory layer allows you to provide same quality of recommendation. Then we have specialized wealth tech distribution like InsurTech on the wealth tech as well. So same thing, right? Winvest, all these models are around the distribution side, how you are aggregating the agent and distributing them. And then you have employee benefit center driven distribution. Let's say you have HRMS, right? And you want to promote financial well-being of your employees. You can partner as an employee, you can partner with platforms like Batik. You can have this platform which can allow you to distribute certain product at a discounted rate at a one click because it is integrated with HRMS. You can pull the data. There is a company called Tartan HQ which allows for remote employment and revenue or income verification. They have started this platform. So this sits within the HRMS system, or let's say as a part of your employee benefit center. And you can provide or cross sell these different products. It can be related to tax planning, it can be related to your insurance, additional insurance beyond group insurance that you want to get. So they partner with different fintechs, right? Like you will partner with OnSurity, or you will partner with ClearTex to get all those products. But ultimately, they are the distribution networks. So this is that segment. In case you have any questions, feel free to ask. I will continue with the next one. Now, this is the lending. Again, interesting.
We can continue, sir. We don't have any questions as such.
Yeah, I'm continuing.
Yeah.
So on the lending side, we have lending operating system. You have in general, you have Lentra, UB, Coiny. These guys provide you with the complete lending operating system, means right from the origination to monitoring, from management to collection, right? Entire thing is what they provide in under the lending life cycle. But then you have specialized for microfinance, you have R2. For cooperative credit, you have CRED. These are the solution provider which focus on the industry specific, because maybe for that industry you require different life cycle management. Then you have alternative credit scoring and underwriting. Now, there are multiple different solutions in that. For general purpose alternative data scoring, you have Finbox, FundFinna, Algo 360. They provide API and SDK. They used to collect earlier device data directly, but with the digital lending guidelines in place, right? People are rethinking this model. People are thinking about how can we collect data with customer consent, but still we are able to provide this entire analysis without appearing as we are collecting everything for lending, right? So you have certain applications which support credit building, credit builder apps as we call it, right? So let's say Credit Vidya, One Score, which gives you your credit score. It advises you how to improve your credit score. And as a part of that, they may want to collect certain data point, and with your consent, you may want to share that alternative data to the lending partner. As of now, they are collecting it and you are not even aware about it. With digital lending guidelines in place, it will become very different. Then we have physical document collection. For underwriting, let's say you require some document from the customer, but it's a physical in nature. For whatever reason, you can't digitize it. Let's say you want to have a stamp paper. In some state, e-franking is not allowed. So in whatever scenario require digital versus physical collection, you have company like DocBoys, which specializes into collection. It can be document collection or the collection, final monetary collection, both. Then you have blue collar or gig economy wise, you want to underwrite them. You have Karma Life kind of a model there where they figure out the reputation of that gig economy player, the data point right from social, behavioral, etc. They figure it out and give you the score. Then on the real estate underwriting, let's say you are a housing finance company or you want to provide home loan. Then you have providers like Navnec, then you have PropCorp, PropStack. These are the API providers. Just to give you an example, right? So Navnec, they give you complete picture around their property and the score around the property. Zepkey, for example, similarly gives you from the registered data set what are the latest sales and rental agreements which are done, right? So this is the alternative data scoring for real estate product, for example. Right? This is how they show you what is the geo score, marketability score, mortgageability score, all those things. And based on that, you may want to decide what pricing you want to apply. So this becomes again separate underwriting part. Location intelligence. Now there might be a locality because today normally when you do underwriting you look at the zip code, but zip code will not give you much clear understanding. What your location intelligence does is that for every 100 by 100 meter grid, they will give you all the economic indicator about that location, how many footfalls are there. They collect data from 250 plus data sets, public, private, paid, everything put together, and they look at the signals. So for example, let's say through satellite imagery, you are able to look at how many lights are on, what is the density of lights during the night time. That is how you can even figure out the average infrastructure availability, right? Similar to that, you can figure out what is the footfalls in the mall, right? Using again smart cam which are there on data that the mall is collecting. You can figure out POS swipes which are happening. So all this data is aggregated on anonymized basis. You can't identify the person, but in general you can figure out on that location within 100 by 100 meter grid what is the economic indicators looking like. And based on that, people can underwrite. To give you one example, let's say Data Sutram or GeoIQ, right? These are the examples. So they collect multiple different data sets, 250 plus data set like from satellite, SMSs, swipes, retail store sales, footfalls, and social media. They use multiple sources, they combine them together, use intelligence on top of it, and then they create micro market data and point of interest data. For example, BFSI sector can use it for customer acquisition. You may want to plan your customer acquisition strategy. You can identify based on that. This is where I want to focus more because this is where my target customer is staying. Customer profiling, from where the customer is lending, you may want to profile it into category. Site selection for your branch, new branch or new ATM that you want to open, you want to select the site. Or resource planning, how many sales personnel I want to deploy in this area. I can plan all those things. Different sectors will have different use cases, but I was just focusing on the BFSI. Then we have income and employment verification. I mentioned about this, Tata HQ. Marketplace lending. Here, they are trying to create a marketplace. Now, the official licensed marketplace, you have P2P lending marketplace, you have P2P lending NBFCs in the market. They work as a marketplace for borrower and lender to connect. Similar to Amazon, they can provide value-added services like underwriting or giving you the risk score so that you can decide which loan you should invest in, right? Based on your risk appetite. You have models which are slightly different, where you can have a fund-based model along with P2P lending. Then you have comparison sites, right? That is well known, so I will not discuss more on that. And then you have other marketplace lending model like OpenDF, and you have SME funding, LC bidding. These are the platforms which are marketplaces for special purpose. Let's say LC bidding is a marketplace for LC. Loan Express or Lend East is a marketplace for loan syndication. So these are the marketplaces which are getting created, and this model is rapidly growing given that they aggregate both demand and supply side on the lending. But the margins are almost negligible. Why? Because they are not doing much beyond that. That is pure tech play. So what happens? Margins are going down, but with digital lending guidelines, every other lending company will become marketplace only. Believe me, right? That is what it will become. You can't do much. So while you are distributing as LSP through RE or RE is distributing through LSP, doesn't matter. End of the day, more and more model will be marketplace driven. New age personal loan, right? Now this is divided into several categories again. You have purpose specific, where loan type comes into picture. There are multiple such players. You can identify for which purpose individual is taking loan, and based on that, you can identify behavior of that segment, sub segment, and you can fine tune your pricing, right? So personal loan, if everyone is giving it, let's say 13%, and based on your behavioral analysis, you believe that personal loan taken for vacation has different behavior than the personal loan taken for education or the uh, home improvement, right? In that scenario, you may want to apply slightly finer pricing and get better market share because you know the behavior. Then you have down payment assistance. Here you have Home Capital in India. Globally, you have Unison as a model. What they do is that they allow you to make down payment of your home loan. Let's say 20% is the equity contribution. So they allow you to take loan of 50% out of it. So 10%, right? And it is interest free. How it is interest free? They work with the brokers, or basically they work with developers. Developers give them subvention, and let's say 2% is what they charge. Let's assume, right? In that scenario, what they pay out to NBFC, because you are getting interest free loan, so they need to pay the interest rate. The difference between what they get from real estate builders and what they pay to NBFC is their profit margin, and that can be healthy. Then you have microcredit provider like Smart Coin Branch. This is the loan given to vendors who are very small micro, vegetable vendors, chai wala, whatever it is, right? So small vendors. Then social lending like Rangde, we all know about it. It is lending for social cause. You may not have that great interest rate within that, but still it is a social cause which you may want to get associated with. So you may want to lend there. Education related personal loans like finance peer we discussed earlier. So I will not discuss this again one more time. But what they try to create is the overall ecosystem where all the related vendors of education related stuff, let's say uniform, books, all those things they combine together. They also work with course providers, and when you make a payment, you earn some reward points, and those reward points you can consume against the digital content that you consume in future, right? So that is the ecosystem that they are creating. Then you have early earned wage access like Jiffy, Refine, you have these players. So what happens here is that you may not have as a practice in your company advance against salary. In case you don't have that and you are not even able to ask because you are afraid it is not allowed, right? Then here, this set of companies work with your employers and they employers did not give anything, and these companies just enter into agreement that payroll management, when that happens, this money that I am paying can be recovered from the payroll. That's what they enter into agreement for. There is no other added cost to the employer. Employee, however, is now able to utilize whatever is the earned wage, X percentage of that. Let's say 50% of whatever is earned. So for 15 days you have worked and now you want some money, you can simply take out money by paying 0.75% or 0.9% as one-time fee. Or if you are using card, then you don't need to pay anything, not even interest on that, because they earn through MDR. So that is the model that they are creating. Then you have legal financing. It is a loan any which ways, but it is through legal pay. And remember one thing, whatever you are seeing here, some of these products can become investment product when it is on the investment side, wealth management side. So legal financing, legal pay kind of a model where people pool money if they believe that the legal case is worth betting for, right? So legal pay as a company can identify cases where they believe the win chances are much higher and you can fund that. Then you have trade finance products which are available. Under domestic, you have VFIN kind of a product, cash invoice. These are the trade finance products, traditional trade finance product with the experience layer on top of it. Everything digital, so you can do it much faster. Internationally, it is interesting to note that you have certain specific licenses. Let's say in UAE, you have Anglo Gulf Trade Finance Bank. So you have a specific license for trade finance bank. They can accept deposit but deploy only for trade finance. Then you have drip capital like model. So on this, all this model that you look at, right, trade report, NewFi, all this model work on the simple thing. They take bet on the importer in the foreign country, developed nation, because exporter is coming for the discounting. They typically fund around 80-90%. 10% they keep as a margin of safety, 10 to 20%, and then they are underwriting ultimately the importer in developed nations. So they have credit insurance partnerships where this insurance companies will underwrite that importer, and based on that only they do it. Then we have DeFi based, decentralized finance based like Polytrade. So again, that is on blockchain. This entire trade finance works on blockchain, and you have fiat as well as non-fiat currency available. Revenue based finance. This is the fastest growing segment under alternative lending. What happens here is that you are integrating with all the different digital touch point of a startup. To give you an example, right from your CRM to your advertisement accounts like Google AdSense or Facebook ad, then to your payment gateway like Razorpay, PayU, and to your final sales funnel, everything you are able to track. You can integrate even the ERP system. So you are able to, using API, you are able to integrate with all these different touch points. Based on that, you are able to get 360-degree overview of your startup where you are trying to underwrite, and that underwriting can allow you to give better pricing as well as, because it is revenue based financing. So if you are investing into growing startups, your IRR can be much faster. So what happens here is that there is no fixed rate of interest, rather than there is an upfront fee that they charge, right? Upfront fee can be, let's say, 5%. So instead of disbursing 100 rupee, I will disburse you 95 rupee. This 95 rupee I will collect over the period, but it will be percentage of your revenue. So let's say 10% of your revenue. If you are growing, because of that, my collection can happen much faster. If you are stagnant, it will take more time. If you are degrowing, it will even take further time. So there is a cap on number of months, and there is a cap on the collection that you can do, right? Because of course you will not collect more than which is due, but because you are able to collect it faster than what you envisaged, your IRR can be much better. Then you have POS funding and settlement finance. As we know, whenever you are paying money to your merchant will get settlement after T plus 1 or T plus 2. But what if for the next day, the merchant requires money immediately to reduce working capital cycle and to make sure that he can grow rapidly? For that, you have fintechs like Scapes, TradeCred. They provide you with the settlement finance opportunity. And by doing so, let's say your daily revenue, you're able to discount in a way. You are supposed to get 100 rupee after T plus 1 or T plus 2. Instead of that, you will get 99.5 rupee, for example. You are okay with leaving that 0.5 rupee because you are getting it immediately, right? But IRR, because it is daily, the IRR can be as high as 20%, right? So that is good. Agri fintech. Now, under this, you have Jai Kisan, Ripmore. All these are the companies which work on, again, demand supply side. They sell end-to-end service through the partners and fund those agricultural products or finance those farmers where they have the clear visibility. World, for example, they give warehouse receipt financing, and that is on blockchain again. So one more example of that. Default tracking. This is a new segment, a new sector, which allows you to track the defaults which are happening in the industry. And this is the data set which is reported with the backup by some of the daters or creators that you may have, right? So let's say today you don't have anywhere data set where somebody is not paying your invoice. With the proof, you can say that, look, this is the invoice which I had shared, this was sent, and now if the name is under this data set, as a part of alternative data set, this can be consumed by banks and NBFCs. You can identify who is not paying on time. There might be some warning signal that you want to identify, and that becomes alternative data. Recordant, Dataswatch are some of the companies in this space. Finally, you have credit building, credit score monitoring, and credit resolution. Right. So here you have platforms like Credit Mantri, One Score, Loan Settlement. They help you improve your score, create better rating, and if required, they work with the bank to give you credit improvement products. So, for example, ICICI Bank has credit builder card. What they do, you need to put fixed deposit, and then you take a card, you spend, you repay. There is a security deposit that you have put, which is there with the bank. But as you regularly make a payment and your credit limit increases, your score also improves. So there are such products. Globally, you have a couple of products like this. You have Chime as a company providing this product. And then you have another product called self.inc. They provide similar product, but they give you a proper loan, not the credit card, which you can then make a payment, but they give you a proper loan, which you are supposed to repay. Then you have consumer engagement, early warning system, collection, recovery. Now there are AI-based collection mechanisms. So you have I can pay kind of a product. They use AIML to identify when to connect to the borrower, through which channel, like WhatsApp or email, at what channel to reach out to them and what time. And they also use AIML to decide what are the settlement options that I need to give in order to increase the recovery chance. So let's say I can give you, if you pay upfront 50%, I will reduce your interest which is there, and I will allow you to make payment. I will forego this part, and it allows for the restructuring. So based on the behavior, etc., they automatically using AI ML decide these are the best possible alternatives that you want to give. So this is on the lending side. Any questions, anyone, if you have, feel free to ask. I will give you 30 seconds for that.
Let's wait.
Yeah. Whenever we have questions, I will answer, I think, at the end now, given that we can aggregate those questions at the end.
Okay.
Now, wealth management side, we have discount brokers. We all know about it. I will not discuss them. Investment aggregators like Grow, Fisdom, ET Money. Then you have financial planning and advisory. Generally, you have Progno Advisor, Cube Wealth. They are combining multiple things together. So they do both aggregation, advisory, both together. Then you have private banking like Crystal AI, Deserve. And then you have robo advisory like Arthayantra, Scriptbox. Now, what robo advisory does, as I mentioned, you have multiple different products available. You want to identify risk score of your customer and recommend product based on the risk score. So robo advisory model does that. Typically, you will not find this directly selling to you because the cost of advertisement they want to reduce. So they do this B2B2C. Alternative investment. In this, you have multiple different investment. This is very interesting, right? So you have aggregators like Oro Wealth around the alternative investments. So you have Altify, TradeCrate, Giraffe. These are the aggregators of alternative investment. Then you have international equity, where you can invest into stocks outside India. You have Stockal, Vested. Then for debt, you have aggregators like UB. Plutus is a platform. Earlier it was known as Cred Avenue. You may be aware about it. Then you have Golden Pie, Bonds India. These are the players who are dealing in the debt. Now, what they do is that they create a marketplace where all the debts are listed. Then you have lease financing. Here, what happens is that they create a special purpose vehicle like private limited company or LLP. They collect money from the investors, invest this money into this SPV, and then buy asset which is supposed to be leased out. Then this asset is leased. You can claim depreciation, as you know. And the advantage here is that once tax is paid by the SPV, investors need not pay the tax again. So this becomes tax efficient because if you are into the highest bracket, like 33% plus tax, this will help you save the tax because on the corporate tax you are paying 25%. And this leasing model also allows you to claim depreciation as a company. So while you may not be able to lease out the complete asset, but on a fractional basis, you are able to earn much more better pre-tax return. Then you have lease financing. Then you have fractional real estate. Here, what they are doing is the same model like lease financing, what we discussed. Create SPV, put money together, but instead of buying asset to lease, which is equipment or furniture, here you are buying commercial real estate. And then it can be LRD or anything else that you can do. You can rent it out. There is a capital appreciation, which will be one component, and then there is a rental revenue, which is the other component. Again, it allows people to invest into small amount. Under this, there is another model called ASTHI, which they have allowed people to invest as low as 5,000, 10,000 rupee, while the other players will require you to invest 25 lakh rupee minimum. Then on the artwork, you have Fructify and Masterworks. They directly work with private auctioneers and they work with them to identify good properties, genuine artworks, and then they allow people to invest into that. Same concept. You have SPV created, art is purchased, art is sold, and amount is distributed. P2P lending, we have discussed about this. Another leg comes here because as an investor, you can invest. If you are a normal investor, you can invest up to 10 lakh. With net worth certificate, etc., you can invest up to 50 lakh across all the platform. crowdfunding and fractional funds. Now, here what happens, these are the global options where WeFunder or Raisin, what they allow you to do is that, let's assume you want to invest into Neuralink. You can't because it is way too costly and it is outside India, very difficult to get. It is a privately listed stock. It is not available. It is not available in the public market. But WeFunder like player or Raisin like player allows you to invest into this startup through a fund with amount as low as £1 or $100, right? So WeFunder allows you to invest as low as $100. Raisin allows you to invest as low as £1, right? And that is the option that they provide. Then you have pre-IPO equity, same thing. In India, you have lead off. Outside India, you have equity Zen. These are the players which allow you to buy and sell privately available or non-listed equity. Then you have Merger, Domo, OK Acquired, and Kelp. These are the startups which allow you to do due diligence on the startup or allow startups for M&A identification. Somebody is trying to sell off their company or acquire the company, they can use this marketplace. Then you have other alternative investment like Winovest, which allows you to invest into wine. Revenue-based financing, we spoke earlier. This is the other leg of it. Then farm financing, you can invest into farm produce. Somebody is owning the farm, you can finance it. Farm produce is sold and you get your return. Then you have EV financing. You can finance commercial EV. Over the period you earn both from the revenue share as well as from the interest rate. Movie financing. You have OTT platforms which are available. OTT platforms are entering into contract with the creators. Now, creators, once they have the contract available with the OTT platform, they can get the financing, and without putting their capital, they can create a show, share some revenue, and give some better return. There are creative agencies which are creating this shows for OTT platform or web series for OTT platform, where the return can be easily 2 to 3x for them, and they are maybe paying 30% as a outflow. For them, it is win-win situation. Brand loyalty based debt, where you are focusing on marketing mainly. Angel investing, startup micro investment. This is slightly gray area, means that there is no legal clarity as of now. Like Tech Invest, Podword, they allow you to invest into startups directly. Angel investment, as you know, is a properly defined legal structure, while this micro investment is not yet very clear. So there are certain gray areas which may get clarified by SEBI in future. NFT and tokens, these are there. NFT can be without crypto also. You have in India many NFT providers like Make My Trip, etc. They have issued NFT in past, and it is with fiat currency. Then you have micro saving application like Jar, Spirit, Decimal. What they allow is to round up your expenditure. When you are paying something, you can round it up, or you can invest small amount every day, like 10 rupee, 20 rupee. And this guys typically invest into mutual fund or digital gold. Then finally, you have investment intelligence and management software like M-Profit, Asset Advantage. These are created specifically for PMS providers, asset managers, so and so forth. So with this, we will conclude our all the segments that we have covered. Neo banking we have covered in general. If you have any specific questions, feel free to ask on whatever we have covered so far. In last 5 minutes or so, I want to make sure that I answer all the questions that you may have, right? So over to you guys. You can ask as many questions as you want.
Please, everyone, go ahead and ask your questions. This was indeed an enlightening presentation, and I hope you are having a lot of questions, but I don't know why you're not typing in here. Please go ahead. We have a few minutes.
I don't know, in case you want to raise your hand, I don't know whether it is possible here, but whatever.
uh,
Yeah, you can ask at least on the chat window.
yes, everybody, please. We're waiting for your questions. This was a real long presentation, and even I was listening to it. I also had some questions, but I am here
Go
just to
ahead, feel
host.
free to ask. I'm more than
No,
happy.
no, no. I'm good. I'm just waiting for their questions. So let's see. Let's wait for like almost 30 more seconds.
Yeah, we will wait for a couple of minutes. We have enough time. Let
Yeah,
them
yeah,
think
sure.
about it. Let them ask their questions.
Absolutely, absolutely. So, in general, if I have to ask you a question, in general, so I know we have people from fintech industry, banking, insurance, and all different industries here attending this whole event, Global Fintech Fest. But people like me who are not from this industry, whatever you've presented, I've heard it all totally. But if you have to just give them 2 cents from your presentation, what would that be
So look,
to the
what
general
happens?
audience?
Yeah. So in general, if you look at fintech as a segment, has four major segments as we have seen, right? Payment, lending, insurtech, wealtech. Currently, top two are payment and lending. As you know, everywhere you will require that. But incrementally, the growth, if you see, insurtech and wealtech are growing rapidly because of the small base effect. Now, within them you have so many different new models, because otherwise it is going to be me too, right? You have enough players in payment lending in the traditional space. So there are innovations which are happening so that people are trying to do something different, a new target segment with some different product variant or new product that they want to capture. And this is
Absolutely.
what you can see directly as a part of this, right? You can
Yes.
see what we have covered. There are
Yes.
so many different variants which are available, new products which are available. They are appealing to different set of customers, segmentation, geography. Based on that, they are trying to distribute. With the ever changing regulations in India, this space is very dynamic, right? Today you have one business model, tomorrow you will find that vanishing completely and a new model will emerge.
Correct, sir.
So to keep track of that, to summarize, you need to make sure that you understand what are these different business models which are there, if not all, at least the headers that I have here, and then track those models, see where are the opportunities available, which we have discussed as a part of presentation. And let's say you want to create your career in fintech or you want to jump into fintech as a startup, then where all you should focus on. That is the main outcome of this session.
Correct. So I hope everybody out here, as Sir has just said, so if you are looking forward to go ahead and go for a startup in fintech industry, so this presentation is really very important for you and everybody who is like starting their career in fintech industry. Again, I'm sure you have heard this whole presentation quite attentively and you have got all your takeaways. All right.
Great.
So
I
I'll just
guess there are no questions, so we are
Yes, so I'll
ready
just
to end
check
our
for the
session.
one final time if you have any questions. So
Sure.
right now we do not have any questions, Mr. Vikram. So I think this
Great.
is the time.
Hopefully, then I think presentation was so clear that they were
Yes,
clear about
absolutely.
everything.
This presentation was very clear. Actually, it was crystal clear. Anybody can understand it. And thank you very, very much for being here with us. And hope to see you back soon.
Thanks. Bye, everyone.
Thank you.
Same as.